Hey, welcome everybody. My name is Michael Camo. I'm director of content for T3 Live. Greta Wall is out on leave, so I am filling in for her for the next couple of months. We have JR Romero with us, and he is going to explain what is going on. We have this hot CPI creating a lot of chaos and confusion in the market. I'm sure everybody's paying attention. CPI came in hot. It's been on the high side the last few months. A lot of people are hoping inflation is coming down. Small caps are getting destroyed. The rate sensitive sectors are getting hit. 10-year yield is creeping up. So the big question for everybody, JR, is should traders care about today? What does this one data point mean for everybody?
Well, it's an opportunity to poke the bear and see what happens. That's generally my approach to it. I think the market will continue its merry way higher. I don't think today tells the market anything it didn't already know, which is that inflation is sticky. We had a CPI print. Key inflation gauge rose 3.5% in March, higher than expected, and it was shelter and energy costs driving the increase. Energy rose 1% after increasing 2 1/3 in February. And shelter costs were higher by, I think, 0.4% on the month, up by 5.7 from a year ago, if I remember correctly. So I don't believe this surprised anyone. So what I'm looking at today is the reaction. We were watching, we called the short in the morning into 52.90 and potentially 52.84, and you tagged 51.76, held the demand zone, retraced 50% of the move, and now we are potentially looking to put in a higher pivot low, build a base, and I believe within 1 or 2 sessions we'll be hitting this declining tops line again right here. So if you zoom out, this is the digestive channel we've been writing here. This was the Thursday low, demand zone, major snapback. I'm looking for us to build a shallow base, either a curling wedge or a reversal wedge, back to the top of the channel.
Okay, so JR, we talked offline yesterday about how you've actually been enjoying this market. Well, you actually described it as violent, but in a good way. Like, what do you mean by that?
Woody Allen once said, "I'm not afraid of death. I just don't want to be there when it happens." I think the inverse corollary is true for day traders. If you're an intraday trader, you're not afraid of volatility, and you certainly want to be there when it happens. So the market is acting in a very technically rational way, in the sense that key levels are holding, demand zones are snapping back, overhead supply zones are being sold. And this is despite the volatility of the moves from the top to the bottom of the range. These are relatively easy moves to actually trade. So for me as a trader, a lot of people will look at this and see a chop. To me, it's Disneyland. It's a chock full of opportunity.
Okay, so like what specific type of opportunities are you seeing day to day? I know today Nvidia was a winner for the room. Like, what is popping up on your radar that's working right now?
So Nvidia, Nvidia has been consolidating here in a very orderly declining channel. Okay, this is Nvidia right there, and this was the key secondary resistance level there around 852, right? So within this orderly decline, there was a beautiful counter trend momentum trade off the 2 and the 5 minute chart right there, right? So you had an ascending triangle that failed but closed right back at the main line of the ascending channel, and we called the buy stop through 853.60 right to the anchored VWAP at 872.56, and it went almost there to the penny, I guess, to the few nickels. But This is what I mean. This market is acting in a very orderly fashion, right? If you're a technical trader and you're trading a declining channel, like so, and you have your prior demand zone here, you know, and you're thinking, okay, shorts are going to cover here. They got trapped through 853.60. Let's trade to the top of VWAP, which is also your, you know, your breakdown area here. Your, you know, so people call this an LPSY. You've got a lot to work with. You've got a lot of opportunity.
Okay, so did anything really change for you today?
No.
As far as how you're approaching the market, so it's still same old for you?
Yeah, we've got tax season coming up. There's clearly more strength on the sell side right now than on the buy side. You can see the urgency of these drops, okay? But the symmetry of these bounces tells me we're still declining. We're still in an orderly decline, albeit you know, very vigorous drops, but we're balancing at key levels. And yes, there is definitely an imbalance in the strength of sellers to buyers. Market breadth hasn't been fantastic. But within all that, for what we do, which is to capture a good amount of the intraday move, there's you know, the market is replete with opportunity.
Okay. Is there anything that could change your mind? Like, are there levels you're watching on the downside that could mean the market's in danger?
Yeah. So if we danger, look, I still maintain we're going to 54 and 5,700 this year. I'm extremely bullish on the overall market. If you look at a weekly chart of the S&P futures, you know, let's go to the SPX. You know, a few months ago, well, I think it was, I don't know, was it August or September? I was on Benzinga, and you know, I told Dennis, I said, look, if you were treating this weekly chart as a 2-minute chart, you'd be looking at measured moves into 54 and 5,700, right? You'd be really bullish on this chart. There's our 127 extension at 51.65, and your 618 extension off this recumulative structure is 56.15. So technically, this market looks like it has a lot more upside. I'm not a fundamental analyst. You know, fundamental analysts are right maybe 50% of the time. I'd rather be right 50% of the time and make money as a trader. So if I'm wrong, I'm wrong. But what I'm saying is that it doesn't seem to me like technically this market's hit any obstacles whatsoever. The uptrend on the weekly is intact. This is the first time we're testing the daily 8 EMA in months. You know, so there's no technical damage done to this market whatsoever. And even if we came back and had a shakeout through the weekly 21, you know, I would still be thinking not a lot's been broken. We could form a range here for a month or two, and the market still wouldn't be broken. You know, if we crack 4,800 and can't get back above the level, then I would be, I guess, a little bit less sanguine about the upside.
Okay, fun little tidbit. So JR, if we take the midpoint of your forecast, essentially 56.50, that puts you on top of every Wall Street strategist, because the guy at Oppenheimer just raised his target to 5,500, who is the highest on the street. So, and to be clear to everybody, your views are strictly based on the charts, correct?
Mm-hmm.
Okay, so how do you block out the noise? Because, you know, there's so much, we're getting so much information from social media and news outlets and TV. How do you stay focused on what the charts are telling you?
I mean, I watch CNBC purely for entertainment purposes. You know what I mean? It's good for a drinking game. You know, I like to see Rick Santelli pop a vein once in a while. Kramer pound his fists on the table and rant. I think that's highly entertaining. It has zero effect on what I do every day as a trader. All of these people have no idea what's going to happen as much as anyone else. That's the dirty little secret about the market. The smartest people on the planet have no idea what's going to happen a month from now, especially with the geopolitical storm heading our way. I mean, we had one of the heads of the Quds Force militia, the Iranians, talking about the distinct possibility they're going to shut down the Straits of Hormuz. What's that going to do for the equity market when oil skyrockets past? This is crude now. Okay, let's go to a weekly chart of crude. What's going to happen when it skyrockets past 93.64 and starts flirting with the $100 handle? You know what I mean? So I don't find any of these analysts particularly helpful. I mean, if you look at the past couple of years, Tom Lee, Kolanovic, Dan Ives, I mean, they've been right a lot of the time, but they've also been fantastically wrong. If you guided your investment or trading strategy on one of the things they said, you'd be into one of several margin calls. You know what I mean? So as a technical trader, I do what the chart says to do. If the market goes up, that's great. If the market goes down, that's great. If it's range bound, I'll trade the range bound market.
Okay, I think that's a good segue into, I guess, topics about sectors. So energy has been very strong this year, one of the strongest sectors. What do you see ahead for energy?
What do I see ahead for energy? A lot of volatility. Am I allowed to call? Am I allowed to phone a friend on that one?
We are going to do this TV style, JR. You need to be the extreme bull or the extreme bear. There is no in between. So you need to pick a side.
Okay. I was going to try to be nuanced and smart. Look, on a purely technical basis, you're in a reaccumulative consolidation after a shakeout back in April of 2020 on the weekly. So the probability, in my opinion, is that you're going to tag that 112.94, 113 handle before you go lower. Obviously, crude is highly susceptible to the geopolitical whims of the Middle East and Russia. So really hard to say what's going to happen. But technically, this looks like it's going much higher and retesting those June 2022 and March 2022 highs.
Okay, so you talked about how you don't like predicting the future.
No.
But do you think the price of crude is itself making a forecast? Like, is that telling us there is more trouble ahead?
That is a great question. Potentially. But if you look at copper, you get a very different copper, for example. What's the future symbol for copper?
I think it's CU. I think it's CU.
Copper. I'm just going to do the CFD. This is a wildly bullish chart, right? In my opinion. So, copper, like a lot of other industrial metals, often gives you a hint as far as what it expects in terms of industrial output. So we have a lot of conflicting signals ahead. I don't really concern myself with trying to predict the future. I think it's a fool's errand, and that's not how traders think. Most of the traders I know are not obsessing over crude versus copper or dollar versus gold. They're trading what's in front of them, and they make educated guesses. And when they're right, they let those right ideas work, and they add to those ideas. And when they're wrong, they cut them short.
Okay,
Predicting
so
the future is a fool's errand.
All right, so I'm going to push back a little bit on you, because what is the difference between, because a trade in and of itself is an expression of what you think is going to happen in the future. What's the difference between that and we're getting some comments like between that and just predicting World War III is going to happen? Like, what's the difference between, because a trade is an expression about the future. So what's the difference?
I don't think a trade's an expression about the future. A trade's an expression about the now. A trade is ultimately, for me, okay, and I'm only talking about me. This is not any trading, investing, or barbecuing advice in any way, shape, or form. But a trader is a merchant. All right, I'm a Jewish guy from Brooklyn. I like to buy and sell things when I perceive an edge, an advantage, based on a perception of an imbalance of value. When value on any asset is perceived to be at an imbalance, it tends to correct back to an area of equilibrium with great momentum. So as a trader, I focus on imbalances, perceived imbalances now that the market isn't perceiving, inefficiencies, and capitalizing on them. The future, Michael, is a matter of management. The present is a matter of executive decision. When I perceive imbalance in the now, I make a decision. And when it starts to work in the future, I manage the trade. I'm not trying to predict the future, man. I think that's a foolish errand. Now, there are many legendary traders who have made their fortunes predicting the future. That's not me.
Okay, so you talked about your function really being finding imbalances in value. Are there any places you're seeing, and I guess I would say this on more of like a swing trading perspective, like where are you seeing imbalances, if any?
Well, right now the market, let's go back to our trusty SPX chart on the daily. Okay, the market is very much extended itself and in phase 3 of the price cycle, right? So this was your accumulation low, your markup, reaccumulation, right? And now what I look at this as phase 3 of the market cycle. Okay, this in itself inherently is forming an area of equilibrium. Whether we reaccumulate and break out, or fail on the breakout, have a little upthrust, distributive upthrust, and then correct lower, is anyone's guess. But because of the phase of the market we're in inherently, this is an area of equilibrium, right? The market is consolidating, digesting the move, and because of that phase of the cycle, we're inherently in an area of balance. I think there's a lot of things the market may have not really discounted, and that is potentially in the future with quantum computing and with names related to authentication and authorization. I think that's going to become a huge theme on the heels of AI. So we'll be watching that. The blockchain, I think, is going to become much more important than people think, and it'll have nothing to do with cryptocurrencies. I think the blockchain may end up being the only way we have to validly authorize and authenticate transactions and literal authenticity. I think it'll be the only way we have to do like two-way verification in the future. So I think a lot of blockchain names may emerge as stuff gets more and more confusing.
Okay, so JR, we're going to dig into quantum computing and quantum mechanics right now, because we are actually okay. So I think that the question of quantum computing is interesting, because we've heard a lot of talk about all sorts of things supposing to take over, like everything from 3D printing to nanotechnology, organic computing. The thing is, like, what if there is something beyond quantum computing? Like, how is the blockchain the logical end to that? Because if complexity can increase in like this exponential way, why do you think that blockchain is sort of the logical solution to that?
because it is a public two-way verification and ledger of all transactions that can be independently verified.
Okay, are you and since we're on this topic, do you trade cryptos at all?
No, I mean, I trade a lot of crypto adjacent names. I love trading Mara and Coinbase. You know, I call Bitcoin the great hedge against making money. If you want a fantastic hedge against your own wealth, go along Bitcoin, hold it for a while, see what happens. It's not for me. That being said, you know, a lot of these crypto adjacent names, Bitcoin names, MSTR, Coinbase, Mara, Riot, CLSK, they're fantastic day trading instruments.
Okay, but you um okay, sorry, brain fart. Okay, so related to related to
Oh, Kamo, get it together, man.
why do you think I'm not on TV? Why do you think I'm here at T3? I'm very unprofessional.
Look
Okay,
at this
so
face
sort of
built for radio. What are you talking about?
okay, so sort of
You're a very handsome man.
thank you. I appreciate it. I try very hard. So related to Bitcoin, because Bitcoin is sort of feels like the gold of these young kids here today. But let's talk about actual gold and silver, because those have been a hot market. They're taking off. They're taking the day off today after the CPI. What do you see ahead for gold and silver? So those are suddenly very hot topics on Wall Street.
Yeah. So we've been calling for the rally in gold for months. Gold, as you know, has been going sideways since 2020, forming an incredibly strong base. So you see the right side break here off the, you know, I guess Mark Minervini might call this a cheat entry here. And you broke this neckline right there. Incredibly bullish base. You know, we've been calling for 2,400 and 3,000 in gold.
Very bold. Sounds like a prediction to me.
But that's what the chart says. Don't look at me. Don't shoot the messenger, Michael. Right?
But who else am I going to shoot? So what else do you like in this market environment? So assuming the SPX does what you want and goes to this 5,400 to 5,700 range, what do you want to be in to profit most from that scenario?
You're talking about my long-term portfolio?
Yeah. Whatever. What's going to make let's assume this happens this year. What do you think goes up?
Michael?
Who's having a brain fart now?
Your screen froze on me.
Oh,
stop playing with buttons, Michael.
Okay, all right. So what do you? So assuming the market goes up, what do you like?
Well, my long-term portfolio, if you looked at it, it would look like a retiree from Boca Raton. It's extremely boring. I have a mix of blue chip, home builders, metals, and mega cap tech. I think that's a good mix. It's really hard to beat the S&P 500. So if you're a long-term investor, being in index funds is probably going to be really good for you. As far as me personally, what I'm looking for here, once we begin our next leg higher, is I think current leadership is going to continue to lead. NVIDIA, Google, Meta, and Amazon, along with Microsoft, are my favorite names. Apple has decided to take a sabbatical along with Tesla. So I believe those names will continue to lead the market higher. I know that's not a terribly sexy and exciting answer, but that's what I'm saying.
Okay, so we talked a little bit about, I believe it was IonQ as a possible way to play quantum computing. So could you explain for our ladies and gentlemen in the audience, what's the story there?
So, like, what is quantum computing? I wasn't expecting a pop quiz.
No, what? Well, we're anybody participating in the market. We don't need to know what anything actually does. For example, like if you want a fun exercise is to ask people what super micro does. Most people will tell you it's a semiconductor company, which it is not. So we don't need to know what quantum computing necessarily is, but what is interesting about IonQ to you?
Okay, well, I'm just going to throw 3 sentences out there so people understand the importance of the shift. Quantum computing, as opposed to traditional computing, does not rely on binary transistor systems. So when you're dealing with the traditional constraints of transistors, right? Every transistor can be switched to a 0 or a 1, and there's a density problem there that is really difficult to overcome. Okay, because you can only pack so many transistors as you go into the nanosphere. Now, we've been very lucky in terms, I'm sure everybody's heard of Moore's Law, right? Moore's Law stipulates that processing power doubles every 18 months, I think, if I'm not mistaken.
Yeah, it's about, yeah.
12 or 18 months. I honestly don't, I think it's 18 months. Anyways, the quantum computing revolution would completely shatter that paradigm and allow compute loads that are exponentially higher. Continually higher. So that would certainly break a lot of things like cryptography for sure, but it would also usher in a new era, especially when you think about the kinds of loads AI systems would be able to maintain. So it will be a very important development. IonQ is considered the pure play on quantum computing right now. It looks like a fallen angel now. This thing IPO'd in 2021 and could certainly go places. The one I think it has a really good chance of acting really well is IBM. So you can see what Dell did here with the AI craze. So this is a Dell chart on the weekly. We've been trading Dell very, very actively. So it's been absolutely wild, the kind of moves Dell has made. IBM is already a leader in quantum computing. So as an equipment manufacturer and a enormous knowledge base in the space, I could see a parabolic move like we saw in Dell with IBM. But we're not ready. We're not there yet. But it's something I'm keeping in my back pocket for when the quantum computing FOMO, the quantum computing hysteria hits the street. I think IBM is going to be the play.
IBM. Okay, so everybody remember those letters. IBM. So what are the chances you think? I'm going to ask a really dumb question. What are the odds you think quantum computing is for real? Let's say in the next 3 years.
I'm not a subject matter expert. The issue with quantum computing is going to be regulatory. Past the the cooling issues. There's a lot of HVAC involved in quantum computing. Apparently, the hurdles are going to be regulatory. So I'm not sure, but I know that it's coming and it's going to change. It's going to change the face of computing, AI, and cryptography in ways that are hard to imagine.
Okay, do you think it's going to impact trading and financial markets?
I don't know. It's a good question. Probably.
Because it seems as if markets should have been solved by computers already. It just seems like it should have happened years ago. Computing power has been, hedge funds have had massive money to put behind these things. So shouldn't it have happened already?
No. Markets are not efficient, and they're also not purely chaotic. I don't think there's a way to solve markets. I don't think there's an intelligence out there that markets are inherently an endless auction, supply-demand auction with constant information new data coming into that adoption diffusion cycle. What AI and robots have done in terms of trading is to bring about a whole lot of speed, and some algos that are intelligent. Most algos aren't. Most algos are pretty stupid. The other thing, and this is unfortunate for retail traders and novice traders, is there's a lot of algos that really understand how novice traders think and are there to just take candy from a baby, so to speak, you know?
Okay, all right. So I once met a very senior person from from a major quant hedge fund, and he said things like hunting for stops don't exist. He said there's no real thought as to what like individual people might be doing. Do you think that person was lying to me?
I don't know. I can tell you I've seen firsthand a lot of these algos, how they're designed. I've been involved in designing a few myself in terms of speech, voice recognition, and speech heuristics. And I can tell you they very much pay attention to all these things in human psychology. I mean, stop running is something we do manually in the room almost every day. You know, I'll tell my room guys, you know, AMD goes to a certain level. This is where the stops are. This is where I would imagine longs to give up en masse and shorts to pile in. So, trying to think of an example we saw a few days ago. This was one right there. 179 3/4, piercing reversal. Everyone had their stops at 179.60. Market makers, algos came in, they pounded it to the ground. So,
okay, so guys, we appreciate you coming out with us today. We always love having JR on. He is, I think he's the best trader on Wall Street. So, guys, if you want to get JR's ebook, go to t3live.com/JRlive, t3live.com/JRlive. If you are watching on Facebook, YouTube, or LinkedIn, the link is in the description. If you're watching on Twitter, the link is in the tweet. And you can learn about JR's story. You can learn how he went from computer engineer to trader. So, JR, thank you for coming out with us today. We always appreciate it. Do you have any final words for our friends out there in the audience?
Stay patient. Wait for the right opportunities. Be vigilant. Let the trades come to you. You'll make a lot of money.
Okay, JR. Thank you, guys. Thank you. And everyone will be back next week, next Wednesday, 12 p.m. Eastern Time. JR, thanks again.
Take care, Michael. Great talking to you.